Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from the Singapore Fintech Festival, and joining us for this segment we have Darius Sit, Founder and Chief Investment Officer of QCP Capital. We're going to talk about the spot Bitcoin ETF and evolution of crypto derivatives. Darius, it's great to see you as always. Welcome back to the show.
Likewise, thank you.
You got it. Let's talk about the Bitcoin rally. How do you see this playing out in the markets?
This has been good for us, right? As a space, as an asset class, market cap is higher by about $4 billion. Overall market cap is up by 50% this year. So this narrative for the Bitcoin spot ETF, the halving that's coming up, has been very positive for the space. We're seeing a lot more institutional participation as well. CME market cap, for CME open interest for futures has crossed Binance. That tells you that traditional finance institutions are involved and getting interested. Deribit, for example, options OI is at record highs again as well. So it's very positive, and we're looking forward to this momentum going on as well.
It feels as if Bitcoin is decoupling from traditional asset classes. Do you have that sense as well?
I wouldn't say decoupling. I think it's becoming part of the capital markets and it's finding its footing, finding its place. Whether it's more similar to gold or equities or as some kind of risk hedge.
Right.
So I think it's finding its footing, and becoming more and more mainstream, especially with the spot ETF. There's this narrative that it's becoming just another asset in the capital markets rather than something separate and something novel.
And that's a great way to put it. It's finding its footing. Let's talk about the Bitcoin ETF. Certainly, it's a big topic of conversation in the U.S. What are your thoughts on that, the chances of a U.S. product getting approved, and how do you think that will impact the crypto derivatives market moving forward?
I think with all the headlines that are coming out and all the progress, whether it's going to be approved or not, I think it's a matter of time. It's a matter of time whether it's sooner or later. And I think it's very positive for the space. It's been the biggest narrative this year. It's been the biggest price driver. It's evidenced from how much dominance Bitcoin has gained this year just on this news. It's great for a couple of things. Firstly, there's going to be a lot more institutional participation. A lot more retail participation as well. And more importantly, for us as derivatives and options traders, I think there's going to be a lot more interest in derivatives in Bitcoin. So, I think it's going to be a very, very big seminal piece when it gets approved. You will see spot volumes going up. You will see players who weren't in the space before joining in as well.
What are you looking for in the next evolution of the crypto derivatives market as you look forward, whether it's specific to Bitcoin or other coins?
It's a good question. I think the two worlds are colliding, right? Or rather, they're starting to overlap and intersect in two ways. Firstly, crypto as an asset class, most importantly, Bitcoin and Ethereum, are becoming seen as proper trading assets, capital market assets. Secondly, I think there's convergence in terms of the way assets are being settled, trading is being settled. So it's about how traditional assets can be settled the same way that crypto does, which is real-time settlement, continuous, over weekends. And I think that has a lot of disruptive changes in the way that the capital markets function. So I think these are the two big areas, and I think the disruption could be very big.
All right, Darius, we appreciate the insight. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me from Singapore. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.